Morning, everybody. Hope everyone is well today, no matter where you are in the world. Let's get going. $105 billion. That is the cap on a guarantee NVIDIA just disclosed with the securities regulator. NVIDIA is standing behind the leases of its biggest customer, OpenAI, on a massive Ohio data center campus that will run NVIDIA's own chips. Here's the part that really gets my attention. The planned new power build behind that campus is at least 92% natural gas. That number's been sitting in a U.S. Department of Energy fact sheet since February. So NVIDIA sells the chips. OpenAI buys the chips. NVIDIA helps stand behind the leases supporting the campus where those chips will run. And the power underneath the whole thing is overwhelmingly gas. That's where we start today. Welcome to Universal Asset Owners Live. I am Ryan Lafield. Today is Tuesday, August 18th, 2026. This morning, the future guaranteed by the past. We're going to break down NVIDIA's $105 billion backstop, the gas underneath it, the money that moved, and why investors may have fewer levers than they think. And everything we're talking about this morning and every morning is in today's daily brief at universalassetowners.com. Every number is a link to its source and is free. All right, let's start with what NVIDIA actually agreed to do. On August 17th, NVIDIA filed what's called a Form 8K with securities regulator, disclosing a series of guarantees tied to a massive data center campus in Pike County, Ohio. OpenAI is taking that campus on a 20-year lease, and NVIDIA's total obligation under those guarantees is capped at $105 billion. Now, when you hear $105 billion, that just sounds like NVIDIA just wrote one enormous check. They didn't. Then, what they essentially did was co-sign the lease. If OpenAI becomes insolvent or stops paying, NVIDIA covers the difference between the guaranteed lease value and whatever can be recovered from another tenant or a sale. And OpenAI has agreed to reimburse NVIDIA for anything NVIDIA actually has to pay. And this is where it starts to get circular. NVIDIA's revenue depends on OpenAI spending heavily on its chips. The campus itself is being built around demand for NVIDIA-powered computing. And now NVIDIA is also standing behind the leases that help support the value of that campus. So one demand assumption is supporting several different layers at once. OpenAI's lease, the value of the campus, the debt behind the project, and NVIDIA's own chip sales. That doesn't automatically make it a bad deal. It just means a lot of this structure is leaning on the same basic idea. OpenAI keeps growing, keeps paying, and keeps needing a lot of NVIDIA-powered computing. So what actually triggers NVIDIA's $105 billion backstop? The answer is pretty straightforward. If OpenAI becomes insolvent or fails to make lease payment, NVIDIA covers the shortfall between the guaranteed minimum value of that lease and whatever can be recovered from a replacement tenant or a sale. In plain English, NVIDIA basically co-signed the lease. There's an exit ramp built into this. The guarantee can end early if OpenAI achieves what the filing itself calls a satisfactory credit rating. So NVIDIA is basically lending OpenAI the strength of its balance sheet until the market no longer needs NVIDIA standing behind it. And now we get to the part underneath all of this, literally. According to a U.S. Department of Energy fact sheet published back in February, the plan calls for 10 gigawatts of new power generation for this campus. At least 9.2 gigawatts of that is natural gas. Excuse me, technical difficulties. We're not ever claiming to be perfect here at UAO Live, but I will fix this. Here we go. This means that the planned new power build is at least 92% gas. And I'll say it again because this is the part that made me stop for a second. That number has been sitting on a government website since February. So if you're an institutional investor holding exposure to this project through something labeled as energy transition investment, you're also holding a very long-term natural gas exposure. And that changes how you have to think about the risk. The credit question and the energy question are tied together because they're ultimately depending on the same project over roughly the same time horizon. All right, let's get into the money moved. 4 things quickly. PIF's 2 audited scorecards, NVIDIA's $1.5 billion equity check, Reddit into the S&P 500, and CPP Investments voting against 950 directors. First, Saudi Arabia's Public Investment Fund published its 2025 results, and the audited statements managed to say 2 very different things at the same time. Profit for the year, 65.2 billion riyals, about $17 billion. But its total comprehensive result attributable to the fund's owner was a 64.7 billion riyal loss. Both figures are audited, both are true. So when a fund hands you 2 scorecards, probably worth reading both. Second, NVIDIA did write an actual check alongside all of those guarantees, $1.5 billion of equity into SB Energy. Third, the S&P 500 changed before this morning's open. Reddit came in, Avalon Bay went out following the Avalon Bay takeover. That means index funds tracking the S&P 500 now own Reddit because the index changed, not because somebody woke up this morning and decided Reddit was a great stock. And fourth, CPP Investments say it voted against 950 directors over inadequate climate risk oversight while classifying a $787 billion portfolio by carbon intensity. One detail there, the release does not define the voting period, so I am not going to call that this year. That is the money moved for this morning. We'll move over to the risk radar. 2 things today, and they're connected. First, the referees. On August 5th, the Justice Department withdrew a 1987 letter that the proxy advice market had organized itself around for decades. Then, 9 days later, SEC staff stopped responding to shareholder proposal exclusion requests. Companies can still file the notices. They just don't get a response. So the courtroom was always the backstop. Now it matters a lot more. And for a big institutional investor that owns the market, rather than simply trading in and out of it, that means contesting a corporate decision can get more expensive. Then there's Hormuz. Brent settled Monday at 90.87, up 2.7%. 6 commodity vessels transited the Strait Monday against a 10-day average of 11. That count is preliminary and does not include ships running with transponders off. Tuesday morning, UK MTO reported an outbound vessel struck by an unknown projectile, with engine room damage and 1 crew casualty. That is their word that they used, casualty. They have not said injured or killed, and the vessel has not been named. And that's where we leave that. Before we go any further, one thing you can actually do with all this, the Daily Brief reaches 98% of the world's sovereign wealth funds, 18 of the 20 largest pension funds, and 10 of the largest charitable foundations, 85% of the largest family offices, and more than 100 billionaires every morning. And it's free. UniversalAssetOwners.com. Come join us. All right, here's one thing to do at your desk this week. Pull up every AI campus or data center exposure in your infrastructure and private credit portfolio. And next to each one, write one word: tenant, vendor, or asset. Tenant means your investment depends primarily on the renter's ability to pay. Vendor means you're relying on a guarantee like NVIDIA's, so your exposure is tied more closely to the chip cycle. Asset means you're relying on the building, the land, and somebody else wanting that computing capacity if the original tenant disappears. Those may look like one big AI infrastructure trade. They're really three different bets, and they can fail in three different ways. If you can't tell which word belongs next to one of your investments, that is probably the thing worth looking at. All right, let's finish. I'm going to flip to the back page today. Today's cartoon, a gleaming futuristic data center sitting on a museum pedestal. Underneath that pedestal, holding the whole thing up, is an old-fashioned gas plant. And it says, "The future is fully guaranteed." By whom? By the past, mostly. And after everything we've talked about this morning, yeah, that one pretty much writes itself. And today's allocation that nobody made goes to every S&P 500 index fund that woke up this morning owning Reddit. No analyst picked it. No investment committee made the call. The index changed, and the money followed. Upvoted by default. That'll do it for Tuesday, today. One edition a day before the market opens. Free, 5 minutes, 5 days a week at universalassetowners.com. Tomorrow we'll be watching Whitehaven Coal with an activist campaign live on its register, and the next print on Hormuz war risk cover. I am Ryan Lafield. Thanks for watching Universal Asset Owners live. Wherever in the world you're joining us from, have a great rest of your day and keep looking for the signals. We'll see you tomorrow.